Happy Friday. It's already December as well. Holy cow. Hey, how's everybody doing? I took last week off because of Thanksgiving. I was busy playing Rummy Cube cards with my kids in Kansas. My son and daughter were both pounding us, and it wasn't a great experience because I hate to lose. But, I did save face, won a few games, and we had a great time. So I hope everyone had a good Thanksgiving as well. But anyway, kick things off here. Good morning. This is Craig Modelmog for this week's episode of Wall Street X's and O's. And before I get cranking here, we've got a great show today. This is going to be some good stuff. We've got to throw our disclosures out there, as you all know. So anyway, the content on this show is presented for informational purposes only. None of the information, it constitutes an offer to buy or sell any security or investment vehicle. It doesn't constitute investment advice, legal advice, tax advice, or investment advice. This information is presented without regard to the individual investment preferences or risk parameters of the investor. Investments can and will lose money, and they are not FDIC insured. So without further ado, see, we're rolling today. I'm fired up. We got a good show. Top three things for today. We're going to have an update on Fed Chairman Powell. He kept his job. Jay, I know you're probably happy too. We're talking about the biggest challenge front and center today. And then going to close it out with the 13 scariest retirement stats for 2021. Ooh, I'm sure you're excited to hear those. And then I got a few closing comments. So we're going to kick things off here. Fed Chairman Powell, first of all, again, Jay, you kept your job. That was good. And I think that was actually a good decision. Often you'll see presidents come in where your predecessor hired the current Fed chairman, and many times they will leave them in place because, one, they really don't like disruption in the market. Two, it's supposed to be a non-political governmental holding, which it's probably one of the few, although I would argue that maybe that has changed slightly, but I do still think they are very non-political, which is important. But he spoke to the Senate and Banking Committee this week. Number one, he removed the word transitory from inflation. Again, Jay, welcome to the game. How long have I been talking about inflation not being transitory? It is not transitory, people. What I find even more amazing is how long it took Jay Powell and our government, our politicians, and even Wall Street to get to the point where we're saying, you know what, this might be a big deal. It'd be like the defensive coordinator in the fourth quarter going, they've been blitzing us all day, I think. Well, yeah, no kidding. Okay, let's go. Welcome to the ball game. What's even funnier about that is this week, inflationary numbers started to signal a deceleration. Shh. Don't tell him. Don't tell any of our politicians or Wall Street big mouths, because you know what? I want to see how long it's going to take them to figure that out. I know, it's crazy. Slight deceleration on inflation. We're going to see if that picks up some steam here. So did some major shifting in portfolios this week as a result of that, trying to get out ahead of things. But he also talked about the significance of the potential to start tapering faster, of which then the news reports, well, we had a very hawkish report today. Okay, I'm going to stop right there. Hawkish and dovish, we hear that a lot. Whenever you hear the term hawkish comments, what that means is, from a Fed standpoint, is they are concerned about inflation and need to look at increasing or raising interest rates to keep rates higher to slow inflation. If you ever hear dovish, it's the opposite. Not concerned about inflation falling, most likely going to be cutting interest rates to try to prompt the economic growth or spur economic growth. So little hawkish, I do anticipate at least one, if not two hikes next year. What is going to be interesting is this, and I've mentioned this a couple times. So for those of you who are first timers here, I talk about all the data that doesn't get discussed, and we really get the magnifying glass out and focus on the things that matter, not the narratives. The narratives are garbage. They make us emotional. They make investors make poor decisions. So we ignore the narratives. We focus on the data and the rate of change of that data. So here's what's interesting. I think the markets have already baked in, I think prior to this, last Friday actually, probably 2 rate raises. I think with a lot of the volatility coming in because of COVID variant increases, we've got some governmental stuff. Oh, I'm not going to talk because that's my big challenge front and center. I don't want to get ahead of myself. There's some things going on where now it could be baking in at least 1 rate hike. What I'm most concerned about is that they're going to be faced with raising rates into an economy that is decelerating along with inflation. That would be a stinking train wreck. And who knows? They're notorious for making the worst decisions at the wrong time because everything they do is on lagging indicators. It's like driving a car looking in your rearview mirror only. I would not advise that, first of all. Very dangerous, okay? This is not to be performed at home, driving your car forwards looking in your rearview mirror. That's kind of how they act because everything is on a data lag, in which if you make decisions on lagging data, you are always going to be behind. It goes into case in point here. Whenever they usually call out, we are in some type of situation where we've got an economic slowdown that's taking place. Okay, we're coming into this. It's usually a year late by the time they mention that. Why? Again, they're looking backwards at data. Okay, so it's going to be interesting to watch that. We're going to really keep our eyes peeled on that and see what happens. But stay tuned. It's going to get good. Okay. The big challenge front and center, there are 2 big things going on right now, thus impacting the markets as I speak here today. Markets opened up pretty excited after building off some really good things from recovering from the COVID meltdown from Friday into Monday into Tuesday. Things kind of started to get a little bit better on Thursday. Here's the deal. Today was the date in which they had to make a decision from a debt ceiling standpoint, which then impacts government shutdown. That's today. Today is December 3rd. That is when they had to make a decision. Well, right now you've got Republicans out there going, oh no, we're not going to support any type of debt ceiling deal, so you guys have to figure it out. Democrats, on the other hand, are coming back saying, hey, wait a minute here. You know what? Both parties have contributed to this really increase in spending and all this stuff, which is true. So they're trying to get the blur the lines and trying to see if they can get a few Republicans to help them out on this deal. This is going to be a big deal because the last thing our country wants is to have another shutdown that leads to a reduction in our debt rating. If you remember back to when Obama was in the presidency, you had the Republicans call his bluff, and we actually had a debt downgrade from our debt rating. But that's bad. We can't have that. That would be economically just ridiculous to even think about. So I think all this digging your heels in and posturing towards not being very accommodating, I think is just that. Neither party can afford to have this type of egg on their face with a midterm election coming up in November, because it will be held against them significantly at the voting booths, and it should. So let's play nice, okay? Play in the same sandbox, people, as I spit here. You know what? You can share buckets and shovels. It's not against the law. It's not a really bad thing. So, and hopefully they figure that out, and obviously we shall see, okay? Now, these are for some interesting facts here. This is moving on. 13 scariest retirement stats for 2020. You all know I'm a big stats guy. That's really all I look at is the numbers. The numbers do not lie. You can shift numbers, but again, if you sift through and you look at the origin of the number and you track it and trace it and measure and map it, you can get down to really what the truth is, and that's what I'm all about. We're going to start with number 13. 7 in 10 retirement age investors worry that inflation will hurt their savings. Yes, I would say yes. Okay. Number 12, the $25,000 threshold for Social Security benefits, which is for single taxpayers. If you file as a single, if you are joint and married, file a joint return, that number is $32,000. What that means is on Social Security, once your income passes those thresholds, percentages of your Social Security become taxable. You know what's crazy? Those levels haven't been adjusted since 1983. Newsflash, not a shocker. Our government never thinks ahead. They never think about things. They just deal with the garbage going on right at the moment. They're not they're not thinking into the future. They're not planning. They're not looking at the impact of their decisions. Tell you a little story here. When I was managing the Merrill Lynch office here in Northern Colorado, I had a really cool opportunity of having lunch with Bob McCann. Bob McCann ran the Merrill Lynch Investment Management Group, which at that time was the largest investment group in the world, over $2 trillion. So this goes back into the mid 2000s, okay? And one of the regional directors asked him a question. What's the biggest change that you had to make when you took this job? And he says, to understand the ramification and the ripple effects of my decisions. Good businesses, good business leaders think about their decisions and who they impact. Our government people, I'm going to stop there because I'll probably start cussing. Anyway, number 11, there are 300,000 fewer births expected in 2021. That's kind of interesting. China's having a big problem right now. Remember, they went from the only one kid or, we're going to get rid of them all. And I'm not going to go into great detail there. They've now shifted because they've had a significant drop in new births, which supports their population, which supports their communist regime and government. You need people to work and do all the garbage that you want done in order to maintain the stronghold that they have. They now have a shortage of people. Japan's been dealing with this for decades. The United States is entering a similar type of environment. It's going to be interesting to watch. So just kind of food for thought. One of those things that make you go, I'd sing for you, but my voice is kind of hoarse today, so I'm not going to. Number 10, 72% of men and 89% of women failed a retirement literacy test. Fortunately for all of you all, you wouldn't be. Why? Because we talk about this stuff. You are informed and educated, because that is what my goal is. And I appreciate you guys for sticking with me and for working so hard. 13 states still have taxed Social Security benefits, one of them being Colorado. Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, North Dakota, Rhode Island, Utah, Vermont, and West Virginia. What that means, again, as your income goes up, part of your Social Security benefits can and will be taxed. That's why it is important once you do retire and you are taking Social Security income, we have to manage taxation, because we want to compress taxation as much as possible so we're not having a large percentage of your Social Security benefit taxed. If there's no way around that, then we have to plan for those taxes that need to be paid so you don't get that. And that's the check you have to write to the IRS, which everyone gets angry with. Number 8, 90% of Americans, 45 years and older aren't. See, sometimes I get so fired up, I just have to slow down and start over. 90% of Americans, 45 and older, aren't waiting till 70 to collect Social Security. Fascinating. Means you can start pulling at 62. Full retirement age is either at 66 and change, actually 65 if you're really old, 66 and change for most, and then 67 for a good chunk if you're like 48 or 49 and older, 50 and older. That's pretty interesting. So that is starting to change. Number 7, with only 1.6% interest rates paid on 10-year bonds, retirees need to rethink their portfolios. This is a fact. When I first got in this business, they used to tell us, rule of thumb, take your age minus 100. That's what percentage you should have in equities. So if you're 70, you should only have 30% in equities. That's back when bonds yielded significantly higher than they do today. So what that means is as you retire, honestly, what I'm doing for my clients and what I see is I don't see it shifting our allocations more conservative. Why? We have to grow our assets in order to keep up with 1, inflation, and 2, the longevity in life. So that's a good thing. Again, if you work with me, that's what we do. All right. But there are lots of people out there that don't do that. I'm just telling you. So anyway, I'm glad we do that. That's another good point. Another good fear. Number 6, life expectancy in the age of COVID fell by almost 1 year for those who are 65 years of age. That means we had a lot of people die from COVID. Then you have all these people, well, actually the numbers were worse, or hospitals were marking it so they could get paid. Here's the deal. I was on a call with a demographer, and he studies all the data. He says that the real numbers as far as COVID deaths is actually significantly higher. But anyway, I'm not going to get off on that tangent today. For a 65-year-old couple, there's a 75% chance that one spouse is going to need long-term care. 75%. That's something, if you don't have it, if you have questions about that, let's talk about it. Most of you that I work with and work for, if you have it, you needed it. If you don't have it, it's probably because you don't. But anyway, if you're concerned about that, call me. Okay. Number 4, medical costs have skyrocketed more than 140% since the year 2000. Think of all the different presidents that have been in office from 2000 to today. How many of them talked about the really extraordinary costs of healthcare and they're going to fix it? Wrong. No one's freaking done a damn thing about it. And that is a big problem. Number 3, 60% of U.S. adults are terrified of what healthcare crisis could do to their retirement. That is a fact. Number 2, older adults' expenses have risen nearly twice as much as Social Security benefits in the last 20 years. That means they're spending more, and Social Security obviously has not kept up with it. Here's the deal. When you retire, a budget is crucial. You have to have a budget, okay? And if you've never done a budget, you need to start writing down where you spend your money and how you spend your money and how much you spend your money. That needs to drive your decision making. We talk a lot about budgeting, okay? In years where you have tough market performance, you need to review your budget. On years when you have good market performance, you need to review your budget. On years where we've had decent market performance, like this year and last year, we need to review our budgets. Something we should always be refining and looking at, okay? The number 1 fear, this is the big one. Social Security Trust Fund is on track to go bust in 2033. That is a fact, but I don't want to freak you out here, because here's the big deal. Social Security is funded through payroll taxes, okay? So it's never going bust. It's never going to zero, all right? What's going to get challenging is that the funds that are in the Social Security Trust aren't covering or able to cover as effectively the amount of people drawing on Social Security. It is something that needs to be addressed. Again, they've been talking about that since I got in the business, and that was in 1993. Okay, that's how long I've been doing this. They've been talking about that very problem since then. Have they done anything to it? No. Once again, politicians, all they're doing is focusing on getting reelected. All they're doing is chirping out there to try to get more chirpers with them instead of doing their damn job. Okay, that's what they need to do. In closing, number 1, I appreciate everyone joining me today. It's been a lot of fun. And I'm doing it early because I actually have a meeting this afternoon. It would really jack my day, and then I have an engagement tonight at 6 o'clock. So I'm kind of cranking this out early. But anyway, what should we expect with COVID? And don't worry, I'm not going down this COVID rant. For those of you joining early or continue, you know I don't rant. I do rant, but I usually try to be pretty call it how I see it, all right? I don't bang the Democrat or Republican drum, or as far as beat the tar out of either one of them. I just want to focus on the facts and focus on what's real, and then we're going to talk about that. All right. Here's what we don't know. We've kind of been going through another little surge, although it's looked like it's been muffled. Okay, we've got this new variant. Okay, this isn't about those who are vaxxed or non-vaxxed. That's not the argument. The argument is this: going into the winter months, from a probability standpoint, from a statistical standpoint, numbers will probably stay elevated. To what degree, we don't know, okay? The thing we need to do is this. Here's what I hope we've learned from this pandemic is, instead of thinking about ourselves, we need to think about other people. If you have a sniffy nose, if you're not feeling too good, stay your ass at home, okay? Be respectful. If you have a meeting with someone, call them up and say, hey, you know what? I'm not feeling real good today. I'm not feeling it. Why don't we just do a video chat, or just talk on the phone, or we can reschedule, okay? Don't go into work. I used to be the biggest one. I could probably, up until I had COVID 10 months ago, I haven't missed a dozen days of work in my entire time in this business, and that was 27 years. Why? It's that badge of honor. Frick, I'm tough. I'm going to work, man. I got to go to work. I can't miss going to work. That's how I thought. That's the way I'm wired. And there are lots of people that, you know what, we're going to work, we're doing things when we're sick or we're not feeling good. That is the biggest thing that I hope we learn. Doing things like that will help this pandemic eventually someday go away. It's not going to happen soon. I've been telling you that for a while as well. And this is, you know, if we're talking baseball, you know, we're kind of in the beginning innings. This is like third, fourth inning, you know. It could be there, you know. Are we midway through the game? I don't know. But the key is, let's think about other people. And obviously, as we enter the Christmas season and the Hanukkah season, happy Hanukkah, all of my Jewish brothers and sisters, and obviously Merry Christmas to everyone else. Here's the deal. This is a great time to kind of recalibrate and focus on what matters and what's important. You know, we need to develop hope for our future. Hope is important. Hope actually is a positive stimulant in our bodies. That's actually scientific. That's not Craig's BS. So if you don't have hope, work on that, because I'm sure if you don't, you're miserable. Okay? So we need to have hope. We need to care about others. We need to love other people. You know, it comes down to that. And I know it's very cliche for this time of the year. Let's not make it cliche. Let's make it something that we think about and that we do every day. For Friday, December 3rd, I love you guys. Thanks for joining me today. This is Wall Street X's and O's. And everyone have a fantastic weekend. And I look forward to catching you next time. And I am out.